Let's dive into today's market trends and the latest financial news straight from the EQAI Morning Briefing.
Think of it as like our cheat sheet for the markets.
Exactly. So we've got some pretty interesting stuff happening, like Bitcoin hitting a crazy $81,795.
Wow.
Yeah, oil prices are dipping, and we might even be seeing a Trump trade comeback.
Oh, interesting.
Yeah, lots to unpack, so let's jump right in. Let's start with the overall market picture. The S&P 500 finished up at a solid 0.3%, the Dow climbed 0.5%, and the Nasdaq just barely moved up by like 0.06%.
Yeah.
But then we've got this Russell 2000 practically sprinting ahead with a gain of over 0.6%.
Yeah, that's a pretty significant difference.
Right. What do you think is causing that?
Well, the Russell 2000 is full of those smaller companies, and they're kind of seen as a sign of how healthy the U.S. economy is.
Oh, that makes sense.
So this jump could be a good sign that people are feeling pretty optimistic about things here at home.
I see. Yeah, that's a good point. And while we're talking about things that are on the rise, Bitcoin's gone absolutely crazy. It hit $81,795 today.
Wow.
Almost a 1.7% increase. But Ethereum actually dipped a bit, just under 1%.
Interesting.
Makes you wonder if Bitcoin is like off doing its own thing.
Yeah, I think you might be right. There have been times where Bitcoin seems to follow its own path, maybe driven by stuff that's just happening within its own little world.
Yeah.
Definitely something to keep an eye on.
For sure. Okay, let's shift gears to what are called cyclical stocks.
Okay.
These are the companies and industries that do really well when the economy is strong. Things like travel, manufacturing, even construction. They're rallying right now, which, makes sense given all the positive vibes we're seeing.
Yeah.
But Mike Wilson over at Morgan Stanley has a different take on it.
Cool.
He says that while these cyclical stocks are going up, small caps might actually fall behind.
Huh, that's interesting. Why would that be?
That's a really good question, and I think it might have something to do with the talk about a Trump trade resurgence. Remember that, the market boom after the 2016 election.
Right, yeah.
Driven by all those predictions of deregulation and tax cuts.
Exactly.
And those policies really helped sectors like industrials and financials, didn't they?
Totally. So this possible Trump trade comeback could explain why we're seeing the cyclical rally, and also why the Russell 2000, which has a bunch of companies that could benefit from those policies, is doing so well.
Ah, I see the connection now. Okay. Let's move over to the energy sector.
Okay.
Things are a little less exciting there, to put it mildly.
Oh.
Oil prices have actually dropped below $70 a barrel. What's going on there?
Well, this drop seems to be mostly because of China's economic stimulus efforts not really meeting expectations.
Okay.
And you have to remember that China is like the biggest importer of crude oil in the whole world. So anything they do, or even anything people think they might do, has a massive impact on oil prices everywhere.
So when China's economy slows down, the energy sector feels it, huh?
Exactly. Their demand basically sets the price for everyone, and any slowdown in their growth, especially when it comes to things like building infrastructure or manufacturing, hits the energy sector directly.
Gotcha. Makes sense. Okay, let's focus on First Watch for a minute. You know that popular breakfast and brunch place?
Oh, yeah, I love First Watch.
They're making a pretty big move, buying up 16 franchise restaurants in North and South Carolina.
Wow.
But it's not just any acquisition, it's their second biggest ever, and it includes development rights. What's the big deal about those?
Well, it shows that First Watch isn't just happy with taking over existing businesses. They're thinking about the long game. They want to lock down future growth, especially in those areas, by getting those development rights. It's a clear sign that they want to be the top dog in the breakfast and brunch scene in the Carolinas.
That's a power move for sure. All right, let's take a quick peek into the world of institutional investors. Invesco Ltd. just filed a Form 8.3 showing what they've been doing with International Paper Company. I know these forms can seem kind of like insider stuff.
Right.
But why should the average investor even care about them?
These disclosures are all about transparency. They give us a look into what big players like Invesco are up to, helping us figure out their investment strategies. It's kind of like getting a sneak peek at what the pros are doing,
So it's like seeing what the smart money is up to.
Exactly. By understanding what they're doing, we can get some really valuable insights into how they think about investing, maybe even tweak our own strategies and avoid some potential pitfalls.
That's really useful. Now let's talk tech. Everyone knows the tech sector is going through some massive changes right now.
Yeah.
Even with a few hiccups along the way, these tech giants are constantly coming up with new things and expanding. What are some of the biggest trends you're seeing in this area?
One of the most exciting developments is The focus on artificial intelligence and machine learning.
AI, right?
Yeah, we're seeing huge investments going into these areas, and the potential impact is pretty amazing. It could change everything from how we drive our cars to how companies try to sell us things.
It's like we're stepping into a sci-fi movie, but it's actually happening right now.
I know, it's wild. Like, imagine a world where your car drives itself while you catch up on emails, or where marketing is specifically tailored to exactly what you like. AI could reshape our lives in so many ways.
Okay, last stop for this part of our deep dive is the financial sector. Banks are getting ready for potential regulatory changes under the new administration.
Right.
Lending practices, capital requirements, all that important stuff is potentially on the table, and that's a big deal. What kinds of changes are we talking about, and why should we be paying attention?
Well, we could see changes like stricter rules about who banks can lend money to and what the terms are. There could be higher capital requirements, meaning banks have to keep more money in reserve, which could affect how much they can lend out.
Okay.
And we might see stronger consumer protection measures, putting in place tougher rules to protect people from things like predatory lending or unfair financial practices.
Wow, these are some big potential changes. What kind of impact could all this have on the financial sector and the overall economy?
Well, these changes could really affect how much money banks and financial institutions make. They might have to completely change how they operate to follow these new rules, leading to higher costs and maybe even job losses. And this, in turn, could affect how easy it is for businesses and individuals to get loans, which should slow down economic growth.
It's like a chain reaction with a lot of moving parts.
It really is. Banks are going to have to be really flexible and adapt quickly to survive in this new environment. And the outcome of all this will impact everyone, not just Wall Street.
That's a great point and a perfect place to pause for now. We've covered a ton of ground already.
Yeah, we have.
From Bitcoin's crazy surge to potential shakeups in the financial sector.
But definitely a lot to digest.
But there's still more to explore. In part 2, we'll take a closer look at specific sectors, the challenges they're facing, the opportunities they're seeing, and what it all means for you as an investor.
Sounds good.
So grab another cup of coffee, and we'll see you back here soon for part 2 of our deep dive.
Welcome back to our deep dive.
We've already uncovered some pretty fascinating insights, but there's still so much more to unpack.
Definitely.
Let's break down some of these sectors a little further, starting with energy. We talked about oil prices dipping below $70 a barrel.
Right.
What does that signal for the energy industry as a whole?
Well, lower oil prices definitely squeeze energy companies, especially those that are heavily focused on exploration and production. It cuts into their profits, making it harder to, well, make money.
So not exactly a good time to be an oil producer then.
Not really. But on the flip side, it's actually good news for other industries.
Oh, how so?
Well, when oil prices are lower, things like transportation and manufacturing become cheaper to run. Their costs go down, which makes them more efficient and often boosts their profits.
So it's kind of like a seesaw. One side goes down, the other goes up.
Yeah, exactly. It just shows how interconnected everything is in the market.
It really does. What about the potential impact of China's economic slowdown on the energy sector? We touched on this a bit earlier, but it seems like a pretty important factor to consider.
You're absolutely right to bring that up. China's demand for oil is massive. They're the world's biggest importer. So any slowdown in their economy is going to have a big impact on global energy demand.
And that could push oil prices down even further, I imagine.
Exactly. Energy companies are going to have to be really smart and adaptable to navigate this constantly changing landscape.
So they need to be prepared for anything, basically.
Pretty much. They need to be able to weather the storms,
Yeah.
and also jump on opportunities when they pop up.
Yeah, it's like they're sailing in uncharted waters and need to be ready to adjust course at any moment.
Exactly. Speaking of uncharted waters, let's shift gears to the tech sector, where it seems like innovation is happening at warp speed.
Right. AI. It's the buzzword on everyone's lips.
It really is. But I think it's helpful to get a little more specific, like what are some real-world examples of how AI is changing things in tech right now?
That's a good point. It's easy to get caught up in the hype without really understanding the tangible impacts.
Exactly. So one of the most obvious examples is the development of self-driving cars. Companies like Tesla, Google, Uber, they're all pouring money into this technology, and we're seeing some pretty impressive results.
It's crazy to think about a future where cars drive themselves.
I know, right? But it's closer than you might think. And then there's personalized marketing, which is also being driven by AI. Those ads that seem to follow you everywhere online, that's AI at work.
Oh, so that's how those ads know I'm looking for new hiking boots.
Yep, pretty much.
Yeah.
AI algorithms are becoming really sophisticated at analyzing our behavior and predicting what we like. It's a little creepy, but also pretty impressive when you think about it.
It is a bit unsettling,
Yeah.
but it also shows just how powerful AI is becoming.
Absolutely. Okay, ready for another potential disruption?
Always?
Let's talk about the financial sector, where those regulatory changes we mentioned are still looming.
Right, that's a big one. What are we looking at specifically, and why is it so important to keep an eye on this?
Well, one possibility is stricter lending practices, meaning banks would have to be more careful about who they give loans to and what the terms are. There could also be higher capital requirements, forcing banks to hold on to more money in reserve, which could limit how much they can lend out. And we might even see increased consumer protection measures, stricter rules to safeguard individuals against predatory lending or unfair financial practices.
Wow, those are some pretty big potential changes. What kind of impact could that have on the financial sector as a whole and even the economy?
Well, these changes could definitely impact the profitability of banks and financial institutions. They might have to completely change how they do business to comply with these new rules, which could lead to higher costs and maybe even job losses.
Hmm.
And this could in turn affect how easy it is for businesses and individuals to get loans, potentially slowing down economic growth.
So it's a lot more than just a few tweaks to the rules. It could have pretty far-reaching consequences.
Exactly. It's definitely a situation where banks are going to have to be really proactive and adapt quickly to stay ahead of the game.
Okay, let's zoom out a bit and consider the global implications of all these market trends. We know that what happens in the US doesn't stay in the US.
You got it. The U.S. economy is a major player on the world stage, and our policies and market trends have ripple effects that can be felt across the globe.
So it's not enough to just understand what's happening here at home?
Right, investors need to be thinking globally and understanding how those global factors might impact their investments.
So what are some of the key things happening globally that investors should be paying attention to?
Well, one major concern is the potential for trade wars and protectionist policies.
Yeah.
We've already seen some of this play out in recent years, and it can really disrupt global supply chains, driving up costs for businesses and ultimately hurting economic growth.
So it's like a delicate balancing act.
Exactly. Any escalation of trade tensions could send shockwaves through the global economy. Another key factor is the strength of the U.S. dollar. When the dollar is strong, it can make U.S. exports more expensive, which can hurt the earnings of multinational corporations and potentially slow down economic growth.
So it's not just about what's happening here in the US, it's about understanding how our economy and our policies interact with the rest of the world.
That's the key takeaway. We're all interconnected in this globalized economy, and recognizing that interconnectedness is essential for navigating the complexities of today's financial world.
I like that interconnectedness. It's a good reminder that we're all in this together. So let's bring it all together. Given everything we've discussed, what are some key takeaways for investors trying to make sense of this complex market landscape?
Well, one of the most important takeaways is that diversification is more crucial than ever. Spreading your investments across different asset classes, sectors, and geographic regions can help mitigate risk and potentially enhance your returns.
So don't put all your eggs in one basket, as they say.
Exactly. Another crucial piece of advice is to stay informed and be adaptable. The market is constantly changing, so investors need to do their research, stay up to date on current events, and be ready to adjust their strategies as needed.
It's about being proactive and staying ahead of the curve rather than just reacting to every twist and turn in the market.
Exactly. By understanding the forces that are shaping the market and having a flexible approach, investors can navigate these complexities with more confidence and make smarter decisions to achieve their financial goals.
Okay, so diversify, stay informed, and be adaptable. Solid advice. We've covered a lot of ground today, from the energy sector's challenges to the tech sector's potential and the uncertainty surrounding regulations in the financial sector.
And how all of that fits into the bigger picture of the global economy.
Right. But there's still more to explore. In part 3, we'll dive into some expert predictions and offer some practical tips for navigating these market trends.
Oh, good.
And we're back for the final part of our deep dive. We've talked about specific sectors, global trends, but now let's look ahead. What are the experts predicting for the future?
Well, a lot of analysts are cautiously optimistic about the U.S. economy. They see things moving in a positive direction, but there are definitely some potential challenges on the horizon.
So good vibes overall, but with a healthy dose of realism. What are some of those challenges we should be watching out for?
Well, inflation is a big one. It's a real concern for economists. When prices keep going up, it eats away at people's purchasing power. and that can really slow down economic growth.
Right, because people can't buy as much.
Exactly. And then there's geopolitical uncertainty. Things like trade wars, political instability around the world, even potential conflicts, all of those things can make the markets really volatile.
Yeah, it's like trying to predict the weather. You can see some general patterns, but there are always surprises.
Exactly. And those surprises can really catch investors off guard.
So how could investors stay ahead of the curve with so much uncertainty?
Well, the most important thing is to do your research. Don't just follow the crowd or chase the latest hot stock tip.
Right.
Take the time to understand the companies you're investing in. Look at their financials, how their business works, their long-term growth potential.
So be an informed investor, not a gambler.
Exactly. And don't forget to diversify your portfolio. Don't put all your eggs in one basket, so to speak.
Right, spread the risk.
Spread the risk, exactly. Invest in different types of assets, different sectors, different geographic regions. It's a classic way to manage risk and potentially get better returns over time.
It's like building a stronger financial foundation.
Exactly. And one more thing to remember, investing is a marathon, not a sprint. Don't panic and sell everything the first time the market takes a dip. Those dips are normal. Just stay focused on your long-term financial goals and ride out those fluctuations.
So patience and discipline are key.
Absolutely. If you do your research, diversify your investments, and stay patient, you'll be well equipped to navigate the complexities of the market and achieve your financial goals.
Great advice. We've covered a lot in this deep dive. Bitcoin surge, the potential of AI, regulatory changes, the global economic picture.
A lot to take in.
We hope you've enjoyed this deep dive into the world of market trends and financial news, and we want to leave you with something to think about. How do you think these market trends will shape the future? What opportunities do you see? What challenges should we be prepared for? And most importantly, how will you adapt your investment strategy to navigate this ever-changing world? Remember to stay informed, stay curious, and keep learning. Thanks for joining us on the Deep Dive.